Good evening. We are live. We are going to discuss a problem that we're currently having in the United States. That problem is a rise in foreclosures. So, currently in the United States, because of all of the changes and people losing jobs, inflation, prices going up on everything, and what I would consider a recession, we are currently seeing a record number of foreclosures. Um, com- Not companies, but homeowners are receiving foreclosure notices. They are in a way. Let me read the article to you. Says if I can get to it. Uh, Trying to find the article. Gotcha. It says foreclosure activity in the United States is indeed rising in 2025. July saw a 13% year over year increase in foreclosure filings, reaching the highest level of the year. This upward trend is expected to continue, with some experts predicting further increases due to factors like rising insurance premium, property tax and assessments, and adjustable rate mortgage resetting. So in July of 2025, there were 36,128 foreclosure filings, which was the 13% increase compared to July of 2024. The various states that saw increases were Nevada, Florida, and Maryland. Silence this phone. Sorry. Um, Experts anticipate a continued rise in foreclosures throughout 2025, with some predicting a significant impact due to pressures in the economy. So, right now, we are seeing, like in 2025, 187,659 homes received foreclosure filings the first 6 months of the year. So a little around a third of that was done in just the month of July. Another way to put it, one in every 3,939 housing units in the United States saw foreclosure activity last month, including defaults, scheduled auctions, and bank repossessions. So we are in a strange market again. Like I said, I always say. So with the strange, when I say we're in a strange market, it's going towards the buyer's market. And while we're seeing a record number, well, for the year, like over in the last year, we're seeing a record number of foreclosure filings. We still haven't seen a record number hit the market. Also, it's a buyer's market. So buyers are getting an opportunity to not necessarily name their price, but get a few more incentives so that it seems appealing to them to buy. What does this mean for you as a home buyer? It means it could be potentially more inventory for you to choose from. However, we don't know what condition that foreclosure will be in. From someone who used to list foreclosures, by the time the current seller got out of their house and they did all the things that they needed to do to get it to the REO status, real estate owned status, sometimes the houses were in shambles, because if a person knew they were losing their home, they felt like, hey, I'm no longer going to take care of it. Or, hey, if you won't work anything out with me, I'm going to beat it up. I'm going to take the fixtures. I'm taking the cabinets. I'm taking the appliances to wherever I go, and create some charges for the mortgage company who owns this property. Also, you want to take into consideration that because there's a foreclosure filing doesn't necessarily mean that the house is actually going to be foreclosed on. Sometimes there are people who have resources which allow for them to work things out with the mortgage company. Mortgage companies do deed in lieu of foreclosures. You also have where the banks do modifications. So a modification is where let's say you're behind. You reach out to your bank, you see if you can qualify for a hardship. Once you see if you can qualify for the hardship, there's a stack of papers that you have that you submit to the bank with bank statement. It's very similar to the application that you would get if you were applying for a house. So it's pay stubs, bank statements, tax returns, W-2s, a hardship letter as to why you are behind on your mortgage. And then you submit that package to the bank, the servicer. The servicer then takes that paperwork and sends it over to the investor who actually owns the mortgage, and then they have an underwriting process to see if how we can modify this. Now, sometimes modifications go in the way of taking what's owed on the property left, that's overage, and putting on the back end and having them start fresh. Sometimes the modification is where they lower the interest rate permanently or temporarily to help ease some of the pain for the person. Sometimes a combination of both. They'll put it on the back end and they'll ease the pain by lowering the interest rate. I want to make sure I preference if you're trying to get a lower rate, do not go and miss payments so you can try to get a lower rate, because there's no guarantee that you'll get a rate or that they'll approve your modification. So I don't want you to take from this, oh, I can get a super low rate because they, without refinances, because they don't want to lose the house, they don't want to take the house back, so they'll give me a lower rate. That's definitely not a guarantee. And then you have programs across the country that can help people who are in a hardship. So while those filings are up, while we're seeing, record numbers over year, I still want to take in consideration that we haven't really seen the inventory. And in, some places people are going to work things out. Real estate agents are going to reach out to borrowers, and they are going to, not borrow, excuse me. Real estate agents are going to reach out to sellers or homeowners and see if they can sell the property. Investors are going to see that the person is in a pickle, and they're going to see if they can buy the property before it goes to the foreclosure sale. And then sometimes people have resources to come out of that foreclosure sale by getting a gift from a family member, taking money out of their 401k. So, while the numbers are up year over year, they're still low, right? So, where there is, someone's misfortune, there's opportunity. And the opportunity is that some of these properties do go on the market. There is a opportunity for you as a consumer, as a buyer, to purchase it. That could create more inventory, but then it also creates someone needing somewhere to live. The other thing is with the foreclosures, even though it goes to the sheriff's sale, may get sold on the sheriff's sale, sometimes the homeowner does not move out of the property. So you have an eviction process that has to be gone through. They also do something called cash for keys. So there's a lot of, things going on with the economy, a lot going on with housing. What I can say to the home buyers, don't necessarily wait to see if this inventory comes on the market. And the reason why I say that is because if banks have gotten so smart, and hedge funds and private investment companies have so much money, so much capital. And I've said it multiple times on this channel. If a bank has 1,000 non-performing mortgages and they want to get rid of them without going through the hassle of the foreclosure process, which costs the mortgage company as well, they could potentially sell those non-performing mortgages in bulk to a hedge fund, to a private equity firm, who then takes those over, and then they figure out a way, hey, let's see if we can work something out with the person currently living in the house for them to stay, or let's figure out how we can get them out. So, while there's a record number of foreclosures for year over year, right, from July of 2024 to July of 2025, doesn't necessarily mean we're going to get to see that inventory. If we do, that creates more opportunities potentially for home buyers who are looking to purchase. And if we also see it could be an opportunity for investors to pick up some property a little bit below market conditions. I thought that this was pretty interesting, pretty interesting, because again, 5 years ago during COVID, everyone was talking about the market crashing. While we're seeing a record number of foreclosures, the few articles that I read, no economist or person said that they saw a crash in the making. They did see challenges of housing selling. And what I do know from working with banks before, they don't want the property. They don't want a house. If the bank is in Fargo, South Dakota, and the house is here in Georgia or Delaware or Florida, what are they going to do at the house? They're going to eventually sell it for pennies on the dollar. So if you know anyone, or if you're watching this podcast, watching this YouTube channel, and you're in a foreclosure, potentially in foreclosure or behind on your payments, reach out to somebody. Reach out to me. I can see how I can be a resource. I've had a couple of calls this last month. I was able to help one of my past clients who had tragedy in the family and got behind, help them figure out how to save their property. And then there was someone who was in a bind because of a medical reason, and I was able to help them figure out what they could do with their property. What I have seen is people with pride, and they wait until the last minute. There are programs that can help you keep your home. There are also ways that banks can help you keep your home. But if you avoid them and don't talk to them, then all they're going to do is to continue with the cycle of the foreclosure process. If you reach out to them, I would say if you miss one payment or you getting ready to miss a payment, start communicating with your bank and let them know, hey, this is the situation. I need to figure out how I can maintain my home. Because what you're not understanding is, hey, if your mortgage is $1,500 because you've been in your house for a while and you lose it, and then you have to go rent somewhere, your rent is probably going to be more than what your mortgage was. So are you going to be in a better position? So definitely communicate with your mortgage company or mortgage servicer. The modification process is tedious. It's going to be frustrating sometimes. You're going to have to resend documents. It could get lost. You're going to have to pay attention in the portal. Like, I've helped people with loan modifications recently, and you have to stay on top of it. You can't depend on them. You cannot depend on them to always get back to you, because there's a department called loss mitigation. The loss mitigation department is one department inside of that bank. Then you have the foreclosure department. Now, while they work for the same company, they're not always talking. So if you're working something out with the loss mitigation department, but they have not notified the foreclosure department, the foreclosure department is going to continue that process until they get something that says this foreclosure has been stayed. If a foreclosure has been stayed, either the homeowner has made it whole, made the loan whole, made the back pay whole, or they've worked something out with the loss mitigation department, which has stopped that foreclosure. Whew, that was a lot. So As a home buyer, I would not let this scare you because everybody's situation is different. Like everyone's situation is different. We have middle class, what was considered middle class workers who work for the US government losing their jobs. We have places like FedEx and UPS that have had layoffs. You have Amazon had layoffs. There's been a ton of changes in people's lives along with increased everything, from water bills to eggs to poultry to meat. Like everything is increasing. But we have to, as consumers, get a grip on what we spend. And the biggest thing about the United States is it's a consumer driven economy. While cutting back on certain things may hurt a business, it may help you as well. And I think that business could potentially pivot and figure out how to operate, but you need to make sure you are being a good steward of your funds, especially in this economy. So cool. Kind of reset the room. I'm talking about foreclosures, a record number of foreclosures, 13% increase in foreclosures from July of 2024 to July of 2025. I'm here to answer your questions. You can ask me questions about the foreclosures. You can ask me questions pertaining to home ownership. I do have a question for you. Because of this is just your opinion. Because of the conditions of the economy, do you believe we are in a recession? Chime in. Let me know what you think. If you're watching it live, let me know if you think we're in a recession. If you're watching the replay, chime in the chat and let me know if you think we're in a recession. Good evening, Kimberly Adams. What's going on, Mr. Clark? And my girl, Laquana. So guys, Mr. Clark and I did a live on his channel maybe 2 weeks ago. Go on over and check it. Devon, put your YouTube channel link in the comment section, in the comment section. I'm going to have him on. We're going to have some dialogue pertaining to the real estate market and what he thinks is going on and get his opinion. He's got a great show, man. Great live, very consistent. I think he goes live every Sunday at 7:00. I missed the last week. Well, this week just passed. But he's definitely someone you want to gather some information from. He's got an amazing channel. See someone. I see someone says recession. I think we're in a recession as well. It's a weird space. It feels like a recession. I'm not an economist by any means. And I think we're in somewhat, if we're not in a full recession, I think we're in like Kimberly says, she says we're on our way. I think we're in the beginning stages. I think that, could be in beginning stages. With all that being said, like there are a lot of, positives going on in the market. If you're a buyer, then, hey, you have the opportunity to purchase homes and not pennies on a dollar, but you can potentially get a discount in certain markets, right? Sellers are potentially paying some closing costs, but not every seller. So every seller has not come to the realization that they can't get top dollar anymore. I have clients out looking at homes and they are putting in full price offers and asking for some closing cost assistance. In certain pricing points, there are multiple offers. And in certain pricing points, sellers think we can get top dollar and we're not coming off a penny. And that's fine. It's your home. But getting top dollar and not offering any type of closing cost assistance in this market is just going to leave your property on the market for a longer period of time. Not only that, they got to understand that builders are offering massive incentives. I'm going to do a video on that. So while there are some great opportunities out there with builders and saving you money, I want to dig into the numbers so you can really see what's going on. Like you can really see how builders are charging, and they're not doing anything wrong, but it's a play on money. Like they're moving money around, like to make it. It's a great marketing tactic. That's all I can say. Definitely going to do a video on new construction, the do's and the don'ts in new construction, and definitely would love for you guys to chime in. Kimberly says we are on our way to a recession. I'm assuming The Informed says we're on our way to a recession. Laquana, you just hopped on and left. You usually comment. What's going on? And then Mr. Clark said it feels like a recession, especially since seeing how things are playing out. So yeah, that is we're definitely in some sort of financial crisis. Does the Federal Reserve lowering interest rates for the Federal Reserve, does that help with the economy? Yes, it could help with the economy. Does it help with the mortgage market? Not necessarily. Not all the time. Not all the time. I'm sorry. It's crazy. Let me see. Mr. Clark says, I went to a new construction today and the builder's preferred lender said they're offering a 5-1 ARM for FHA and will start at 3%, then move to 1% for the rest of the loan. Got you. That rest of the loan is so ARMs are the right. People are afraid of adjustable rate mortgages. I'm a put a caveat in there that I've never done an adjustable rate mortgage as a loan officer, because people want to see, they want to feel like a fixed rate is the way to go, and it is. Like with an ARM right now versus 17 years ago, they're totally different products. Stronger. Not everybody can get them. Back in the day, you can have a 580 credit score and get a 5-1 ARM, a 3-1 ARM, 7-1 ARM, 1-1 ARM. Like you could get those type of loans, but now you have to have stronger credit. They provide a little bit less of a rate, but when they adjust, if you were not in a position to refinance when they adjust, that's when it could create a problem for you. But I mean, I'm learning more about ARMs, Devon. I just haven't put anyone in it. I like fixed rates. I don't want to play Russian roulette with someone's rate or ability to keep their home. It says, lucky for me, folks keep making babies that need child care, but even my profession may see some slowdown. Yeah, yep, Kim, like people are going to continue. They're going to continue to need daycare, But you're right, it could affect your business if, a mom or father is out of work for an extended period of time and they have kids. Whoever doesn't have the job is probably going to stay home with the kids to, save money. So, like, that could be, job losses could affect your industry and your business as well. Let me see. Can you speak about the conservatorship changes the administration is considering? Um, are you referring to if you were to leave a property for your children, that does not necessarily mean that you're going to that your kids are going to inherit your property? From the housing crisis. Um, I'm not. Maybe I know it as a different name. So I'm not able to speak on it, but let me look and see. While I'm looking that up, do you have any? Does anyone have any additional information or questions? Um, Additional information or questions that they want to talk about. So another thing, and I spoke briefly on, and maybe this is what you're talking about. So the new administration or the administration is thinking about, like I mentioned, if someone passes away and their children are obviously living, they're trying to change it where their kids don't necessarily inherit their parents' property, um, which I think is ridiculous. I think it's ridiculous that someone's parents worked hard and tried to make a way for their kids and give them some sort of something they could leave them, or if they left untimely, that the government would try to step in and take something from someone that they worked so hard for, which leads to, from my understanding, a way around it is to put your property in a trust, and have specific instructions on who gets the property and where, and how. Because at that point, when something's in a trust, you don't own, but you control it. So I would definitely check into that. Again, guys, we're talking about the foreclosure increase in housing. I mean, the increase in foreclosures over the course of the last 12 months. And you're right, Devon, that is utterly ridiculous. Um, Ridiculous, but it's us as consumers and homeowners who need to take advantage of playing their rules. So let me tell you something about trust. You hear a lot about it on social media, but no one ever tells you what the cost is. I don't think I've ever heard anyone do a video on what the cost of a trust is. We look into a trust. Trust costs like $4,000. It is a expensive upfront payment. And as you continue to build or put things in a trust and they change, it continues to cost. But that's one thing, right? It's expensive. It's more than I thought it would be. But the other part is it's protecting your legacy, protecting your families, your grandmoms, your moms, your house that you leave for your kids. So definitely, you want to check into those things. We just have to be more informed, stay on top of things with the housing crisis and the housing problems. And we just want to make sure we're in position to maintain our home. I talked a lot about foreclosures and maintaining a home, and my channel is specifically geared towards home buyers. But I think this is information that you can use to make sure you protect yourself. And I would not wait until the last minute to see. I would start figuring out, okay, what does it look like to get into a trust for what I have and what I own? That's something you can reach out to an estate attorney and get some information from to help you set up your estate, not only for yourself, but for the future. I think we really need to think 4 or 5 generations ahead from people that we will never see. They will never know us, and they probably won't even ever hear our name. They just know that they were left some property with their family. Another thing that I'm seeing a lot of is not a lot, getting a lot of information about is people requesting how do they set up a family compound. What does that look like? They're trying to find land. I had a conversation. They're trying to find land and build a compound because they don't know if their kids are going to be able to purchase a home when they become adults or get out of college. Like, that's a real thing. People coming up with homesteads and compounds so they can have land for their family. And then it's like a family compound. I'm seeing generations buy houses or look to buy housing together because that's the only way they're going to be able to afford it. So, there's a lot going on in the housing market and the economy in general. And people are trying to think ahead and figure out how they can maintain until we figure out what's going on. We like United States is the only country, I believe, that has 30-year fixed mortgages. Everywhere else has 20. They got 5 years. They got different levels of a mortgage. FHA putting down 3.5%, conventional putting down 3%, USDA and VA no percent. Like those type of loans aren't even in other countries. You got to put down 20, 30, sometimes 50%. In some countries to buy a home, or the housing price is less in some cases, but that's still a chunk of money because the United States typically we get paid the highest wages. So, it may be their 20% may be equivalent to our 20% based off what they make. Again, hey guys, let me know if you think we are in a recession, headed towards a recession, or what are your thoughts on the actual economy. Again, I haven't mentioned it. However, I do have a Facebook group. I do have a newsletter that we send out on Tuesdays, Thursdays, and Saturdays with information. If you missed a live, that gets sent out to you. If we put out a video, that gets sent out to you. I got a huge ask for you. If you got, I would love to get to, and I think I mentioned it, get to 5,000 subscribers. I'm going to say by the end of October 31st, 2025. If you guys could do me a huge favor and make sure that you have subscribed to the channel, and B, if you can refer or share this with 3 people. I'm just asking you to share it with 3 people who you think the channel would be beneficial to, so I can get my subscriber count up. I'm going to continue to put out videos. I'm going to continue to do lives and do my best to put out informative information that helps people. And, I'm talking to a specific group of people. Yes, I want my subscribers to grow, but I want to have the right people who are interested in my channel and buying a home. So if you guys got any questions, let me know. My voice is leaving me a little bit, but I'm here for it. If you guys got questions, you can ask me any kind of questions in pertaining to housing. Ask me questions about housing. If you're still in the market, what do you think of the market? Do you think this is still a seller's market, even though I said it's a buyer's market, or you're not concerned about the market? You're more concerned about how you're going to survive where you're at. Because that's another thing. People are scared. Some people out here living their best life, and some people trying to figure out what's going on. Mr. Clark, how many basis points do you think the Fed will cut in September? And if they do, will it impact the mortgage rates either up or down, or have lenders already baked that in that rate? Great question. I think that based off of information that the people a part of the Federal Reserve have been asked, I think they will potentially decrease the rate by 0.25%. Some say half. I say possibly 1/4. What that affects? That affects student loans, credit cards, cars, personal loans, that type of debt. Do I think the mortgage companies have it baked in yet? I don't think so, but I have seen a trend of interest rates going down over the course of the last 6 weeks, maybe. There's spikes where it goes back up because of the market, but for the most part, I've been seeing interest rates go down. I think interest rates are down the lowest that they've been since April or March or April of 2025. So we're seeing a trend of rates going down, but let's remember, rates going down doesn't necessarily mean that they're going from 7% to 5.5%. It could be that an interest rate is 7%, and to get that interest rate, it costs $2,500 on today, and then tomorrow morning when the market opens up, that same 7% interest rate for that borrower now costs $1,500. So that's what they mean by rates going up and down on a daily basis. Doesn't necessarily mean it's going to go down percentage points, but the cost to get the rate. So if you could buy a house today, if you were locking your rate in today, and you had 7% interest rate, and that 7% interest rate costs $2,500 to lock today. But when the market opens up tomorrow, and that same borrower who didn't lock today has a 7% interest rate, but it costs $1,500 to lock that 7% interest rate, the market has gotten better. But now if that person says, hey, I still have this $2,500, what can I buy my rate down to? That may just give you enough to buy your rate down to 6.99 or 6.875. So then again, you can do more with that $2,500 and get a better rate. I don't know if they're baked in yet or not, Devon. I do know that we're seeing a trend of it going down. I think the Federal Reserve, in this case, I think the Federal Reserve reducing rates helps the market indirectly, because then people believe that that the economy is getting better, and then they have more money to put towards housing. What's going on, housing nerd? Thanks for joining, man. Says thanks for the live stream. No problem, brother. Good message. I'm not seeing a lot of foreclosures in Central Ohio. I think it's a portion of the wealth wedge that's been in a recession for years. Yeah, man. It's weird. So the other part is that the way states foreclose properties affects how the foreclosure process and how many foreclosures are processed, if that makes sense. So here in Georgia, you can miss a couple payments and then they can start the foreclosure process in a matter of 30 days, right? In Delaware, it is a 6-month process. So you miss 3 payments and you get your foreclosure notice. And then they file for foreclosure if you haven't done anything. And it takes about 2 or 3 months for that 2 months to happen. And then 30 days before you get foreclosed on, they have to serve you notice. So in between that time frame, you could fix whatever issue you have. So each state has a different foreclosure process. Some people have the ability to figure out something quickly. And then some people just don't understand that they have the ability to figure something out. But again, like I said, there's millions of dollars available to people to help save their home that states and different organizations put into play once they figured out after the last housing crisis. The other thing is there's programs that a couple administrations put into play so that people had an option to go back to their servicer and work something out before they actually lose the property. The problem is the person is stressed. They're not knowing that they can do it, and they don't necessarily go to and figure out how they can fix their wrong. And listen, doesn't mean they're deadbeat. It just means something happened, and at that time, whatever was going on was more important than paying their mortgage. So then playing catch up or listening to people saying, hey, you're going to lose your house, or not knowing how to proceed. If you're ever in that situation and you miss a payment and you think you're going to miss another payment, your first call should be directly to your mortgage servicer, or find out some type of community organization in your area, a state agency that can help you in that process, because it's tedious and it can be overwhelming. So you just want to make sure that you are taking the proper steps to keep your home. Again, when you're on Zillow and you see these pre-foreclosures, that's, some of those are people who have gotten notification and somehow Zillow is able to pop them up. But then, 6 months down the road, it's still on there as a pre-foreclosure, and the house has sold or hadn't sold, or the person fixed it. Let me see. They should continue to increase, especially in FHA heavy states. Good point on the program. The good advice on missing payments. Thank you, man. So it was a good point that you mentioned. So out of all of the mortgage programs, FHA typically has the highest foreclosure rate. Let me repeat that. Out of all of the mortgage programs, FHA typically has the highest foreclosure rate. So that's another reason why FHA typically gets a bad name or a bad rap, because people think people just can easily get a loan. And anybody who's been through this process understands it's not an easy process. Good credit, bad credit, no money, some money. There's going to be some sort of hiccup that you run into, because people do banking differently. They do different things with their money. So the government, VA foreclosures. So recently, the government has put in play a program that will allow for veterans to make it easier for them to save their house. Meaning, I think they can help them with up to 12 months of payment, not necessarily payments, but getting them back on track for 12 months. so they aren't foreclosed on. That's a program has been put in place to help our veterans keep their homes, which is, it's key. They worked hard. I mean, they took care of our country. A lot of veterans now have seen war at some point, whether it was Desert Storm or the Iraqi or the other small or short wars that we've been in. So, we definitely need to take care of our veterans. But hey, listen, there are, a lot of people who are in hardships right now. So if you feel like someone who's in a hardship situation, send them this video. Send them this video in hopes that they can glean some information from it. I had one client she was on the verge of losing her property, and the Georgia program was able to help her save it. She got back on track, and then she realized, hey, this is too much for me, and she went ahead and sold the property. And sometimes that's an option, right? You're losing your property. Instead of losing your property, losing your equity, and not getting anything out of the property if you can no longer save it, it's okay to start over. Sell it. Put it on the market and sell it. Take what you can and start over. FHA, if you had a foreclosure or short sale, you can buy a home 3 years after you went through that foreclosure and short sale. 3 years is not a long time. That gives you an opportunity to reestablish yourself and to get things back on track. Conventional financing is 7 years. USDA is 3, and VA is 3 as well. So, there was, I had a call today. A lady said that, they were in a jam because they did not read the contract that they had signed for a lease purchase property. So now they have to try to find housing or get out, and they're trying to figure out what to do. So there's a lot of people potentially being displaced that could also be homeless. But we have to I provide information to help people. If you are watching this channel and you know someone, or you're in a situation where you are about to be foreclosed on, you got questions about getting foreclosed on, reach out to me. My contact information will be below. I'm here to help. I'm never to hurt. I can help you in terms of figuring out something quickly in all 50 states. We can have an idea how to look up the information. And if not, I have resources in different states that can help me. And also Google's my friend. You have to type in the right words, or go to a certain agency. But, if you're in a hardship, which a lot of people are right now, take advantage of the opportunities that are ahead of you. Now, at the same time, don't take advantage of an opportunity because you don't want to pay your mortgage. Only utilize it if you really, really need to utilize it. Guys, this has been a great live. I'm going to take a couple more questions if you have any. If not, I'm going to jump because my voice is leaving me and it's becoming harder and harder to talk. But again, if you're watching the replay, go back to the beginning and listen. We talked about the foreclosures that are increasing in the United States year over year from July 2024 to July of 2025, right? I've also discussed how that affects the market in terms of home buyers having the potential to see more income. And then I also am discussing options for you if you're in a foreclosure situation, how you can potentially get out of it and how you can get help. It is a stressful situation. However, there are opportunities and options for you to get out of it. Should I reach out directly to the homeowners about buying the house I currently rent, or do I need to go through my rental management company? That's a great question. Kimberly, if you have the owner's information, I would go directly to them. or just maybe have a conversation with the rental office and see if they're willing to sell it to you. That would be my suggestion. Sometimes that person in between could, if they don't have you or the owner in the best interest, could get things misconstrued. But that's not a bad option either, to buy the house you live in if you like it. I've talked about that plenty of times. Any more questions? Guys, I appreciate you guys for coming out here tonight, joining me, engaging with me. I want to give special shout out to Housing Nerd. I'm going to have to check out your channel, man. Special shout out to Kimberly Adams, Mr. Devon Clark, The Informed, Laquana Surgeon, everybody out there secretly watching and not saying anything. Also, we currently have 17 people watching. I need everybody who's watching, when I cut this off, I need to see at least 17 thumbs up. Now, the number's been teeter-tottering back and forth since I've been on, but I need at least 17. It's easy to hit the thumbs up button. Costs you nothing, right? Nothing. Costs you nothing to give me a like. And again, do me a huge favor. We're on a mission to hit 5,000 subscribers. 5,000 subscribers by October 31st. So we're going to keep pushing. We're going to put out more information. Do your part. Help a brother out and share. And with that being said, I'm Kevin Jefferson, the People's Lender. Have a great night.